With a stroke of a pen, President Trump signed executive orders that breathed new life into the Dakota Access and Keystone XL projects. So what does this mean for TransCanada, and could this be the beginning of a boon to the Canadian pipeline and energy sector? Here to sort it all out, and that is no small task, Thomas George, Portfolio Manager of the TD Resource Fund and TD Precious Metals Fund. How are you?
Oh, I'm good. Yeah, thank you.
You're welcome.
Happy New Year.
Happy New Year. I know it's a bit late. No, I was thinking, I was telling this to David, it's so hard for, I think, even for a lot of people to kind of sort through what's going on, but for you guys,
yeah,
there's a lot going on.
Oh.
So I have a two-part conversation I want to do. The first part, I want to talk about pipelines and what it means for Canada, and then I want to kind of take it very meta. And the second part, we'll talk about commodity prices and what you see.
Yeah, and I would say that latter part will be more interesting. Like that.
Yep.
That's where there's far more iterations. It gets far more.
Okay, we're going to make them wait for that. So that's going to say that's good. So let's talk a bit about Keystone. On again, off again, on again, but with conditions and asterisks.
Yeah. Like a big kind of a Trump tweeting condition, which is like, you're just like, but no, I think all positive. And net, we're coming back from a phase not that long ago where we were just like, we are in a trapped geographical jurisdiction. We can't get this stuff out, and we're, our crude is selling at a deep discount to the global benchmarks, and that was a bad thing. The good thing about this is, in fact, once you add Keystone XL to the mix, on top of what Trudeau has already said, we
had no pipelines, and then we've got them.
Now we got an abundance, and you know what? Excess is okay. Net, all of this is very positive.
Yeah. Is there any kind of the one thing that people are focused on is they're going to renegotiate the terms of the agreement. Now I know this is going to affect Canadian companies in the short term, but again, net, this is a very positive thing. You may not get the immediate work, but the sector will benefit overall.
Yeah, all things balanced, I would say, for us to have a market for our product. With caveats, which is kind of what Trump has presented.
Is better than none.
It's better than none. So I think we'll take it. So needless to say, in Trump's grandiose way, as masterful negotiator, economic rents will start to come to him. And it's kind of like when my kids play. Like my son's 7 years older. He always gets the economic rent. He's the big brother, right?
Yeah.
That's the kind of and frankly we need it. So whatever.
Yeah.
We'll agree.
What about the idea of having a tariff on Canadian oil?
Yeah, this is I thought the chart that was presented earlier was very good. We're balanced in trade with the U.S. So all things equal,
and they're using this as an example of how trade should work.
Exactly. So hopefully, we had Steve Schwartzman here, preaching, saying, don't worry about Canada. But the problem is everything Trump does is very, rapid gun machine fire, 140 characters kind of thing. Mm-hmm. So what we really need is certainty. And that's what the market's lacking here. But, the fact that he stated that he wants his pound of flesh even from the pipelines leaves me to believe let's not just say things are going to be phenomenal just because.
Yeah.
I think the inauguration speech was something, and that was something very clear. Buy America, hire America, live America. Whatever. It's going to be RV culture, left, right, and center. Like this was a very clear, shot across the bow to anything global trade.
We promised now to talk about commodities, and again, with all this, and we just talked to David about this as well, infrastructure push, and we're seeing a lot of the cyclicals move up. We're seeing a lot of the raw materials go up as well.
Oh, for sure.
Can you frame for me in this new world order, which it really is?
Yeah, it is.
Just generally speaking, who are the winners? And who are the losers?
Yeah, so I think at a very high level, if you had to distill what is Trump saying, there's a couple things where he's saying trade deals were all bad.
Yep.
One element, and another thing is let's make infrastructure great again.
Yeah.
So let me tackle the let's make infrastructure great again. There's really, if you pull back the numbers, there's a real strong case at the infrastructure level. So government spending right now for infrastructure, roads, government infrastructure is at 0.1% of U.S. GDP. That's the lowest level since 1947, and it was as high as 0.678 percent of GDP. So we're talking 5. It could easily double. It could easily triple. So there's a real push here for infrastructure spending, and we kind of distill that what we think simply. And he's just said, and we don't want to trade with the world. And he said that about Keystone XL.
Yeah.
Let's use American pipes.
Yeah.
So what that means is American steel. So when we think about it, it's just who benefits within the U.S. borders specifically, and it's the clear winner is steel. American-made steel will be a winner, but more broadly than that, broad commodities should win in this as well, because this could be a very significant step up in infrastructure spending.
Right. So basically, even the raw material makers have to bring in the commodities to do what they need to do.
Exactly. And at the very core of it, we're talking about a U.S. economy that's basically at near, there's an element of full employment already, and wages, we're already seeing wage inflation. So you're adding real kindle here to a well-running economy already. So the other part of that is inflation.
Yeah.
And when you say, well, no, and we don't want to, we want to trade with other partners that have goods that keep inflation down with America.
Yeah.
Now you're talking about making those toys that were used to be made in China in America. Like that, Billy's not going to get the same toy. It's going to be a little.
And he wants toys, trust me.
Yeah, exactly. So it's going to be interesting to say the least, and I think it's going to be inflationary, and that really brings us to our last thesis that within America, just specifically thinking about this region, you're talking about a dynamic that's really going to add a whole wall of money to an already well-running economy. So we're talking inflation, we're talking gold becomes another hedge again. So gold's an interesting one where in a deflationary period, we just saw that last year with negative yields, gold has value.
Yep.
Then you get into this Goldilocks phase where gold has almost like people are like, well, I just want to invest in the stock market and I don't care about inflation because it's not running too hot or too cold. But then immediately we can move into a world where inflation just runs out of control.
Yeah.
And Trump strikes me as one of those guys. He's not a fine tuner. It's loud, bang it out. Yeah. So
exactly.
So that's kind of my thinking is that he runs his his own ego will inevitably lead him to run this economy way too hot, which will be it'll be good for America, it'll be good for jobs, but there will be a price to be paid on the inflation side.
Okay, so let's talk a bit about again, for someone who's looking at, say, okay, I get it.
Yeah.
What are some ideas to actually buy? Like, So what do you guys like?
So if I had to say, how should you think about this? And there's a lot of iterations here.
Yeah.
And I really want to stress that because any one of these things that we're stating here can easily be thrown off depending on how he thinks about border adjustment taxes, whether he chooses to go after China. This is a very, very interesting outlook. But, at a very high level, I would say stay close to U.S. infrastructure. What that means is, engineering, construction, all good. When you think about U.S. steel, all good. Copper, copper will go into these projects as well.
Yeah.
Those are all good. Now the huge caveat, is no trade war with China.
Yeah.
So U.S. steel should still be okay, but if you go trade war with China, China's a big consumer of copper, big consumer of iron ore.
That can push everything down.
That can push everything down. So a lot of this is a bit of a tango, depending on how much he wants to push, the real trade barriers.
And Detour Gold is a name that I think you liked as well.
Yeah, sure. So Detour Gold for us. So two names that we like. I'll start with the gold. Let's call that the hedge or the insurance. Detour Gold. It's a Canadian-based gold mine, 25 years of life of mine. This in our view is one of the best plays to get real long-term exposure to a good hedge.
Fascinating. You know what? I'm just going to leave it and say I think the whole China discussion, I'm just going to park and have you back and we can talk about that.
Yeah, I'd love to.
And again, when we know something, because right now we don't know. So.
That's all.
Thomas, thank you.
Thank you very much.
Thomas George, Portfolio Manager of the TD Resource Fund and Portfolio Manager of the TD Precious Metals Fund.